This is the Friday, June 28th, 2013 version of the Market Plus segment. Joining us now is Jamey Kohake. Jamey, welcome back.
Thanks, Mike.
We've had a lot of questions this week on Twitter and Facebook. Folks are curious about the weather. We've had abnormally cold spring, abnormally wet start to the summer, and now we're in a heat wave in a lot of the parts in the country. How is the market trading these weather events? Is it having much of an effect on new crop corn and beans?
It has. The Midwest, better corn areas, I'm talking I-80 north, really hasn't seen drastic heat yet. And you look at the 10 to 15 day forecast, and there's not much out there. Major heat wise, I'm talking 90s, 100s, and goes back to normal precipitation again. And it brought the market lower last week at times, and I think we'll keep a cap right now on major rallies. But that's what we need to, spur some of these shorts out. Eventually, will be a big heat scare come late July, hopefully, to, push some shorts out, give some guys some better prices to sell into.
Okay, so in the immediate future, keep an eye on weather and don't expect a whole lot on the upside.
Yeah, the weather right now is bearish. We've had some, good heat down south, hundreds down around I-70. It's been good. It's really brought the crop up to where it needed to be. There's some major heat out west, 120s out there that could really maybe move the dairy market a little bit higher, but here in the Midwest, it's very short term.
All right. And it's predicted to continue next 10 to 15 days, and then we're just going to have to be keeping an eye on weather scares as we get into late July.
Yeah, weather scares, heat scares, if heat ridge or heat dome would set up somewhere.
All right. All right, so that's things to keep an eye on. Be sure to keep an eye on the weather this summer. It's going to be just as big a story as it is.
Yeah, it's a full-blown weather market right now until we resurvey some acres.
All right. We've had a lot of questions also, and I'm sure you've had these. Justin in Rock Rapids is asking a question a lot of people are asking. We touched on it on the show. Is the USDA lying in these acreage numbers they threw out today? What's your thoughts there?
There's a lot of frustration today. Looking for more of a neutral report at least. I think it was kind of obvious that there are less corn acres, but it is what it is. These numbers were done June 1, and you have to trade it. I mean, we'll all sit back and yell and scream, and should be trading 570 today instead of 510, but hopefully get some these acres resurveyed, get a bounce, and get back to more respectable level to sell into. But yeah, I don't think the number is accurate, but it was June 1.
Right, and there were a lot more planting intentions June 1 that have since been scrapped due to the rain, due to the heat and the other weather problems we've been having. Now, Josh has a question, and it's a question that we touch on a lot on the show, and you mentioned it earlier during the market analysis segment, but maybe you can explain it in a little better detail. How come corn continues to go down on the board, yet we continue to see this historically tight basis? What's driving that distinction?
Just trying to pry grain loose around the country pretty much. Certain different pockets of the country and different situations supply-wise and demand-wise. But I think as we get closer to last trading day with July, they will merge together. We went into delivery today, so there are no limits. Most guys are out. I doubt we see any major type of delivery situation with the July, but I think we'll get closer to $6.90, $7 with the July contract eventually. I think tight basis levels are here to stay, and the July will move up. But really the situation is most people listening here, watching this, aren't trading July. They're trading SEP or Ds.
Right.
And the SEP got hammered with the Ds again today. So, yeah, if you got some cash corn, it's benefiting you. You're trading futures. You're probably trading SEP or Ds.
All right. And now what's your thoughts on September? As we've mentioned on the show, how do you best trade the September contract when it's being treated as new crop, even when we know there's going to be tight supplies?
Yeah, I think eventually it will separate itself, and there'll be a great spreading opportunity there by the Labor Day, sell the Christmas, and you guys can take advantage of that. And I think it'll be soon when that does separate.
All right. And now another topic that we touched on just briefly on the show, maybe you can go into a little more detail. DJ in Daisy, North Dakota, is asking, what's your outlook on fall feeder cattle and live cattle given the bearish corn number?
Yeah,
what's it going to take? You mentioned $1.57 in November feeders.
Yeah,
what are we going to have to see to get to that?
57, 58 area I think would be a sell right now unless corn would stay on a free fall. like I said before, we're right around the May lows right now. The key next week's going to be to hold the $5 mark and keep that in check. But yeah, it's all going to depend on corn. We got a 450 basis, 430 basis. Yeah, these feeder cattle guys hopefully can get back making some money again.
Yeah.
If we get some major heat this summer or early frost, watch out. We're going back to plus $5 physical for corn again.
All right. And Robert in Columbus Junction has a question. What's your advice on selling the rest is old crop corn and beans?
I would hold off. If you didn't sell any pre-report, I would sit back and almost wait till August. I think you maybe sell some late July. Check your local elevators, ethanol, see if they're shutting down for maintenance, something like that in August. But
Right.
I think it's here to stay. And if you hold it to August, I think the basis will be better. But this question though, he might be thinking it's trading off July. July will be at $7, and you get on $1.50 or 8.5. That's not the key. The key then is we're trading off September, and September is drastically lower. But I just think still hold and get a more positive basis yet.
Now, what's the outlook on corn and beans imports coming up from South America? I mean, with this strong basis, obviously there's a lot of incentive to bring grain in from elsewhere. Is that going to be put significant pressure on basis as we roll through summer?
I think it could, but there seems to be a little bit of corn coming in. Late summer time period. It usually goes to the East Coast hog guys. And I wouldn't be a bit surprised if there isn't a large amount happening again this summer to those guys. But I don't think it's going to be a big market mover. I think it's expected, and supplies are too tight. Farmers are still too tight-fisted yet. I don't think it's going to crash the basis at all yet right now.
And probably won't have much of an effect in the Midwest.
Not yet. And one of the reasons why the guys do it out there, it's been over past years cheaper to have it transported from South America than it is to have it railed out from Moline or Quad Cities or Kansas City even.
Okay. Now, Jamey, before we let you go, what are your thoughts? What would be your trade of the week in this next week? What really looks good to you?
I'd like to have the hogs rally back to what they took off today and sell October up around 88.5. I think hogs are getting way extended too fast. We see a nice jump in the products. Cash has kind of stalled out, I think, gotten really toppy. I'd like to get short hogs short term.
And how long, or what would you be looking for as your exit?
Like 2 to 4 weeks area,
Okay.
that time period. You could sell some, 92, 94 strike calls, or solid futures, 88.5 area.
All right. Well, great. Thank you so much,
you.
Jamey. Appreciate having you with us. And a big thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we'll continue to get expert answers for you. Thanks for watching, and have a great week.